Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, March 16th. I tell you what, guys, this spring forward, I know it's only an hour, but it's kind of thrown me off my game, you know. I had a set routine, and I'm an early bird to begin with, but this hour seems to have thrown me off kilter for a little bit, so hopefully I'll get it in gear here in the next few days after it everything normalizes, as they say. So here we are at 6:30 in the morning. Quick look at markets. S&P futures are flat. The NASDAQ is up about 0.4 to 0.5%, and IWM small caps are down about 0.5%. Last night, I think Mike Wilson from Morgan Stanley downgraded small caps, advising traders to take some money off the table, extended, valuation, blah, 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 all that kind of stuff. We'll just have to watch. It was interesting to note yesterday that IWM was soggy compared to the rest of the indexes. And in yesterday's note, regarding technology, the QQQs, I had made a note that on Friday, even though yields closed on the highs above 1.6% on Friday, with TLT closing on the dead lows, that I was quite surprised how well technology had held up during the day, and that relative strength extended yesterday to see technology actually outperform. So let's get into the charts and we'll kind of see where that leaves us today. There is a 20-year bond auction that goes off at, I believe it's 1 o'clock today. So that will be an important thing to watch as far as yields go. And the FOMC starts their 2-day meeting process today that culminates tomorrow at 2 o'clock with the FOMC press release. And then, of course, Jay Powell at 2:30 starts his presser. So, and I believe there's also a bond auction tomorrow at 1 o'clock. And I believe those are 10-year tips, inflation-protected bonds. So, those are three things that could influence the rate market. But I think what's going on with technology is that at least in the large cap space, the FATMAAN names and some of the bigger names that actually have earnings that they've made peace with this range between 1.5 and say 1.6% on the 10-year, and traders are coming in and seeing value, at least in the large cap names where there is valuation support. So, and maybe it was just the rate of change in the interest rates that had roiled the market. So, we're going to have to keep a close eye on technology. It did cross some technical milestones yesterday, so we'll see if that strength continues through this week. So let's look at SPY. We're trading at the highs. Yesterday, in early trading, there was a reach back. You can see here with this candle wick. I hope you can see that there, where it reached back to the top of this gap, found support there, and then it was more or less off to the races the rest of the day with a steady climb right into the close. And with the averages up 0.6%. Here we can see it on the 30-minute chart. Here was that little shakeout, reach back candle back into this prior gap that is yet to be filled. And then as far as trading purposes go, I think it's really important just to keep those um, success keys in front of you. Number one, a reach back to support is always an objective long. But if you miss it, don't get disgusted and throw away your day just because of that. We had a level here at 393 and a half where you could say, okay, we had a hammer candle, we came up, and then we reclaimed a well-marked level. So that was your second buy point at 393.50. So if you had that, you got, so what, we ended up at 396.50 more or less. So that was, that was $3 to the good if you were able to, capture that trade. So closing on the highs, I mean, that's bullish. And if you look on the equal weighted S&P 500, I believe the symbol for that is RSP. RSP. You will see that the equal weighted S&P 500 is doing even better than the cap weighted index, which is, of course, SPY. So that shows there's broad strength under the surface within SPY that is helping this advance. Let's move on to the Qs. I thought was real interesting in the morning trade. There was the this little reach back here as well, and then there was we had a pre-existing open gap between 315.50 and 318, and it had spent some time in here and struggled. Remember this, the gold moving average here relates to the 50-day EMA on the daily, and we've also got, if we were to pull up a daily chart, we'd see the declining 20 EMA in there as well. So it spent the better part of the day pinned below the 50 EMA on the daily, but then finally in the last between 2 and 4 o'clock in the afternoon powered through that level, closed this gap, and closed on the highs, which is a good sign. Here we see the same price action on the 30-minute chart, where eventually this gap was filled, and then we closed, up here in the what is it, almost 319. Now I've got a little line of resistance here at the prior highs of last week. If and it looks like it is. I mean, in the pre-market, if the pre-market gains hold of 0.4, 0.5%, we will open up above this level of resistance here, just below 320, and then we'll have a path to 322, and then a really big level will be this 324, which was resistance here, and support here. So that's a major line right there. If it can take out 324, I think you'd have to say the Qs are on their way back, because then we'd have an open path more or less to this gap here at 327.80, $4 wide gap up to 331, and then right on up to the top. A lot of work to do between here and there, but I mean, that's how it goes. You take one step at a time, grind through the overhead resistance and make progress. So if the FATMAAN names wake up, Facebook, Apple, Microsoft, Google, Tesla, all that stuff, this index will continue to advance. It's a cap weighted index, and those big names are 50% of the Qs. So if those names continue with some relative strength, I expect the Qs to continue their advance. Okay, IWM continues to grind higher, but it was only up 0.4% yesterday. A little bit of sogginess. I was watching it close. Um, I I'm long IWM, and I thought the index would continue to outperform, and it still might, but not really happy to see it down this morning, and maybe that downgrade by Mike Wilson, who's pretty closely watched, has something to do with it. I don't know. But anyways, I think the line in the sand on IWM is 232. You know, you lose 232, and then, 230 comes into focus, and then you've got, a series of open gaps below. I think, looking way down here is a little bit beyond the pale at this point. But certainly, if you were to lose 230, you'd have to think this next gap below would be in the crosshairs. Here it is on the 30-minute chart. Here's your 232, your 230, and then we've got this gap here at roughly 229 to 227. If today 232 were to fail, I would be closing out my longs on IWM, and just not saying I would go short, but chances are it's going to come back in here to 230. So anyways, 230, as long as it holds 232, it's fine. If it could make progress, up into the 235s, that would be great. But a little bit of sogginess this morning. Facebook had a real nice day yesterday, up 2%. We had talked about 268 being a good pivot point, and really it fired right out of the hole from the get-go. Had a nice series of opening candles, then did some flagging action for a while, and then bumped up off of 272 up towards 276, which was the prior high from last week. So today, if Facebook can take out 276, I see 280 as the next level of resistance, and then it would be back up to this prior high at 284. I wouldn't want to see, a backtrack below 272. Otherwise, you probably see some backing and filling with price, coming down below 272 back to test 268. But Facebook has been really strong. Had the gap and go. I think that was Thursday, and then they pulled the rug on Friday, and then they went right back up to the highs. So that's pretty constructive price action, I'd say. And as long as it can hold 272, I think it's going to be in good shape. Apple had a nice day, 2.5%. We had talked about this 120.50, and there was a reach back candle right out of the gate, come back and close the opening gap, and that would have been a nice long entry. We went right up to resistance at 123, spent some time flagging below, and then popped into the close right against downtrend resistance. Now today, I think 124 and that downtrend resistance is your pivot point. If it can pop 124, I think it can find 127, and then that will be the next big level for Apple to clear before it can, in my mind, truly say, the downtrend has been taken out and it's on now on an upward trajectory. I wouldn't be surprised if it came up here to 127, had a little problem, possibly even back test the trend line and then go. But, Yeah, I think there may be some energy here if it can pop 124 this morning and maybe get a run right up to 127 later today if the market stays constructive. Tesla didn't do a whole lot yet. Well, 2%, that's a nice day. The scale is so compressed here, it's hard to tell, just how many dollars are involved. But anyways, price popped above this 705 level, and now this resistance level turns into support. So turn this line to, shaded green. As long as it can hold 705, it can find 725, which was an important level. Resistance here. So if it can take out 725, it's got pretty much an open path towards 770 in this little gap above. So Tesla's looking fairly constructive here. Microsoft, kind of soggy. It's down $1. Needs to take out 235, and that's been our pivot point for several days now. There was a good buying opportunity, though, early in the day where it opened above right here at the bottom of the gap at 236, came down, lost 235. That was your sell, lost the pivot point, came down, perfect kiss of the top of this gap. See the reach down candle? And if you were short, that would be your cue to, cover and then reverse long, because, you were at support with that tag of the gap. And if you did that, you had a very nice round trip. Even if you missed that perfect exit in reverse long, you had the recapture of 233 that you could have got into, and price spent a couple hours right down here at 233. So there would have been a lot of opportunities to buy there, and then you got a really nice close up to 235. So if you were on top of your game, even though it looks like nothing happened, you could have had $2 down and $2 back. That's a great day of trading Microsoft. But today, continue to key off at 235. Amazon, pretty much a nothing day, but the free 50 club did deliver again. You got a reach up here close to 3,100, which failed, and then you got a move down to almost 30.20. So you had, a good, you got your $50 move there, and then once 30.50 was reclaimed, you got a little push into the close. So that 3,100 again should be a nice pivot point for you to key off of on Amazon. Google mostly was a nothing burger yesterday. Key off of this 2050 at the bottom of this range. If it can recapture that, I would imagine 2075 would be a first target, and then 2100 back up at the top of the range would be your second target. And I just noticed here that I didn't draw in. You've got a gap here between 2100 and let's call it 2080. So there's a $20 gap to fill up at the top of the range. And if price can, get up in the range and things stay constructive, I would expect that gap to fill and then have price make another run at 2100. Netflix. Got rejected here at the open, came back to 510 and held the line here at the top of the gap and then had a nice close. So if you were opportunistic here and you were interested in trading Netflix, you had a lot of opportunities here. I see 4 or 5 candles where 510 had held, And so that was a very objective level to, try along if you were actively trading it. And then you got a $10 move into the close. As it stands now, as long as it holds this 517.50, you got a chance for 525 and then 530 and then 535 as it grinds back up through these overhead resistance levels. Okay, now I want to show you 3 chart setups. I may have shared this yesterday, intraday, but Zimmer Biohealth, Zimmer Biomet, MedTech, medical supply and equipment company, does a lot of joint replacement type stuff. Anyhow, has been consolidating here in all of 2021 between, let's say, 153 and 165. I've got an alarm here at 165, and I also set an alarm here at 153. If price breaks above 165, the measured move is about $12. That's the width of the consolidation box, which would put it up here in the high 170s and possibly even higher. That's just the measured move. But I think that would be a very objective long. And if this ends up consolidating more and makes a trip back down to the bottom of the box, down towards 153, 154, that would also be an objective long at the bottom of the consolidation box. And then your first target, if it holds, is simply a trip back up to 165, where if you got that and then you got a breakout, you'd be really sitting pretty. So I like this one long at a couple of different levels. It might be worth setting an alarm in your system for that. Gaming. This is Las Vegas Sands. Gaming has been doing really well. In fact, several weeks ago, we had a trade idea on county, I think it's either county or country casinos, ticker CNTY. If you go back and look at that, we had a fantastic entry on that. I know a couple people in the trading room are long that name, and it's been cranking out the money. It's trading at the highs, I believe all-time highs, and put in a fantastic day yesterday. So that name continues to run, and if you want to put that one on your watch list, if there's a pullback in the in the days or weeks ahead, that might be a good one to opportunistically put in a buy. Ticker on that again is CNTY. But here on Las Vegas Sands, we've got some flagging action here between 62 and 66 after a really nice run up off of this low in February. So I've got an alarm at 66, and if that triggers, I'm going to get long LVS and look for a move up towards 70, 72. I really like that. And if we were to redraw this as a bull flag, we would drop our flagpole down here to 48 and then extend it over here. And then you've got a much larger projected measure move well into the 70s and possibly up towards 80 or above if this were to break out. So you can redraw that and find that projection on your own, but I can just eyeball it here. You've got an $18 move, and then 18 on the 62 is 80. So that wouldn't be all bad if we got that breakout. And also remember, they had the catalyst that they are selling their Las Vegas properties to Apollo. So they're going to be getting in, I think it was $6 to $8 billion. I can't remember the exact figure, but they're gonna be bringing in a lot of cash, and they're going to be able to deploy that in other higher growth areas, and they get the vast majority of their income from Singapore and Macau. So I think they're going to be expanding their Macau operations. Uh, and as things open up, the Macau casinos should be firing on all cylinders going forward. So that might be, a little bit of a fundamental backdrop for Las Vegas Sands. But if you look in the gaming sector, all the stocks look constructive. I mean, Win is doing great. We mentioned CNTY. Um, there's an esports gambling ticker, GMBL, that's doing well. I mean, if you just MGM, Melco, all those guys are grinding higher. It's just on LVS, this was the most objective chart that I saw within the group, with a well-defined level that we can key off of. And I think that idea is the watchword. As we go forward, you got to find an objective spot, and it's not just good to have a ticker that's running. You got to have a spot to fire against to know when you're wrong. Otherwise, you're just out there in space, buying and hoping it doesn't pull back tomorrow. So at least with this setup, we know exactly what we're shooting against, and that would be 66. And lastly, let's wrap up with BABA, which has not been, doing well. This was, back here in the fall. This was when, Ant Financial was going public, and it was going to be the biggest ever, and Jack Ma was popping off, and then he got himself into some hot water, and Baba, got the rug pulled for 3 months. Came down here, made a low, bounced, and now is back at the lows. But what I want you to take note of is the bullish divergence. We had a low here, low in price, low in PPO, low in RSI. But here at the second low, higher PPO, higher RSI. And therein lies the bullish divergence. And usually, in my experience, and I know as soon as I say this, it'll be invalidated, but usually it's a money setup. Why? Because you've got a well-defined line to shoot against, but you've got rising momentum, and you've got rising RSI to go with it. So that is the technical setup on a double bottom that you want to see, that bullish divergence. So, to make a long story short, we can shoot against 225, and as long as it holds, the double bottom setup is intact, and the only thing that would invalidate it would be, a drop below 225. We did have this spike low down to 215, which is, I'd rather it wasn't there, just to make the chart cleaner. But I think that was an overshoot, and I think this is the real technical bottom here at 225, and that is where it stopped on its way down here. Now, that doesn't mean, obviously, there's a lot of work to do. I mean, prices below everything, below the 8, 20, 50, and 200. But if the setup hold, that's always the setup on a double bottom. You're usually, below your moving averages. So it's going to take a little work to grind through. But I think, once it takes out 250, if that were to happen, then it's off to the races. I think the slow part will be right in here between 225 and 250 and say, hey, look, you could take the approach of saying, hey, look, hey, Chris, great setup, but I don't want to wait, or I don't want to be involved with this, even though I see the double bottom, I see the divergence, but this could be a slog in here, right? If it doesn't gain its footing, I'm going to alarm 250. And if price can prove it, come off the double bottom, I'll give up the 25 bucks. And when price takes out all the moving averages, you've got this convergence here of lateral resistance at 250. You've got the 200 and the 50 right there with it. If price can prove that, then I want to hammer it. And I'll get long at 250, and then, price should really start to accelerate to the upside once it takes out these resistance levels. So there's a couple different ways to play there. Set your alarms or take your position as you see fit, but I really like the setup. The bullish divergences off the double low, those are the ones you look for when you're flipping charts for reversal patterns. So let's wrap it up there. Got 3 trade ideas. We got the Qs looking more constructive, especially in the large cap names. Keep an eye on bubble stocks. If you see interest rates tick up, we've got interest rate catalysts in front of us with a couple of bond auctions and Jay Powell tomorrow. Seeing a little bit of weakness in IWM with analysts saying, take some chips off the table, blah, blah, blah. We've got our line in the sand at 232 on IWM. Some large caps seem to be continuing to perform at the highs. So, things look pretty constructive here on a Tuesday morning. So I hope that helps. If you're new to the channel and find the commentary helpful, we'd love to have you aboard. Hit that subscribe button and the alarm bell. You won't miss a thing. And then over in the show notes are places to visit the blog site and register for the content. That way you'll get a nice, neat email each and every time I publish content. You won't miss a thing. And you'll get an invite to our trading room where you'll find a lot of good friends and aspiring traders to walk along the journey with you as you get better as a trader. And so yeah, let's leave it there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.